Okay, so hello traders, this is my first video on my YouTube channel and this is related to all the tradings, intraday trading mostly that I do, and this channel is mostly oriented towards the psychology on the strategies basically that I use. I'm mostly oriented on the SL hunting because it works best on my timings. I usually trade on early morning. Okay, so today let's just start quickly. Today I booked a loss around 3000, so I took a trade around 937 and exit around 945 in bank nifty, okay, with 100 quantity. So loss and profit doesn't matter. What was my psychology and why it went wrong, that is the most important thing, right? Wait just a second, let me just it's loading nifty back. Okay, so let us first of all try to grab the psychology of what is going on. So usually in stop loss hunting, which is the most precise way of actually trading, the main, you can say it like advanced option, advanced price action. So if you see, for that you need to know where the stop losses are, what the most of the people are thinking outside. So if you see, this is a 15-minute chart of the bank nifty, and usually if you see like from past few days, the market is doing is market has been trading in a range, right? Now this could be happening because of many news and other reasons, but usually we try to see in the charts what is actually happening, right? So this is the fall that Adani gave, right? So after that, now there has been in the news, now this portion was a sentimental mostly. So what okay, this is okay, this I think started here, the Adani fall and this one, right? So after this fall, I mean, you see, when the market falls like this, most of the people after, like, let's say after 1 or 2 days, mostly people will be inclined to take a put option, right? We are option buyers, okay, first of all. So mostly the people, if you see here, the people would be inclined to take a more easily would be inclined to take a put option here. So but if more people will join as a put option, then how will the market work, right? There has to be a call option buyer. So here in the first day, if you see, the market keeps going down, right? Why? So even with the news, the market can't just keep going down, right? There has to be buyer. So if you see it carefully, although this is a 15-minute chart, in the 5-minute chart, if you can, it will be more clear. The market would have gone directly down, right? Like a sharp move, like here. But why didn't go in that way? Because the news was also negative. The Hindenburg news also came out, right? But it went like giving some green candles and some red, right? And if you see in the we are not going in the 1 minute chart video here, you have to explain a lot here. So here what is market doing is, market is creating buyers and slowly hitting their stop losses, and that's how the market is slowly moving down. Okay, that's how the market goes down. And if you see, this is the next day at 9:15, market gave a big green candle. Why? Because it has to create the buyers, right? Otherwise how will the market go down? I mean, if it is intended to go down, how will it go down, right? So this is how market works. Now at this point of time, from here, the most of the people would, whoever would have bought, the call option, would have been getting trade for like multiple times in this day and also in this day. So those people would automatically be inclined towards the put option. So there the market takes a turn, because here most probably, based on chart, what I can see is the market must have seen a lot of put option buyers and very scarce, a lot of scarcity in the call option buyers, and that's how the market works. It immediately break all the stop losses of the put buyers, and the call option buyer, whoever is smart here, would have bought here, and thereafter it slowly brings the market up. And you see here, as we discussed here, why the market fell down so quickly here and not quickly down here, because if you see the levels, right, if you see the previous chart, the market has already been down, moving down, right? So already the whoever the most of the trader, I would say most of the trader would be automatically inclined to go with the market, right? The most emotional way of trading, right? But here if you see, the market gave a big candles, right? Here it is trying to break this high also. So here the psychology of the people change. Usually it is very hard for the people to change their psychology in this trend, and this is where we try to pitch in, right? So here what happened, as you see, like this will tempt most of the call option buyers, and immediately the market gave a big fall after that. So this is how the market was moving. Again, since the charts don't try to repeat usually, because now the people are also learning, so market went into consolidation, and again as with a slight trap, again it buy, and again into consolidation, right? We are not explaining much here. So if you see the psychology, right, the market has been trapping a lot, right? Market has been difficult here, I would say. I myself have lost continuously in these days. So here if you see, like the market has been like calling the option buyers and option sellers together both. Market tempts you to makes you think like here it is going down, then again it picks up. It makes you think like it might break out, but again it comes down, like that. And it's been going on since long. Then there might be another aspect of the news also, but we follow the charts only. And recently what happened is, yesterday the market has given a good breakout, right? And before that also a good breakout came, right? So after this breakout, what would be the psychology of, again would be the psychology of the most of the people buying, right? Because also the market news also a little bit, if you follow the market, things have been correcting. People are forgetting this already forgetting this Adani effect. And also most of the people, what would they do? They they mark some levels like here, yeah, like this, and they fix themselves like if the market breaks above this level, only then we will be making trade, right? So for those people, so the market did do, so it made a breakout. This is clearly a breakout. If you just more specifically, if you just draw the trend line like this, if it's a breakdown, so this here now along with this, what is more important is here in Nifty, if you see the same, it has given a breakout of 18,000 level here, right? And this is more psychologically more, I would say, effective to most of the people, right? So most of the people, once they heard the news like market has broken 18,000 after long these ups and downs, they will be usually most likely to be oriented to buy, right? And on top the market gave a breakout and gap up opening, right? So let's see on the 1 minute chart what happened and where basically we took the trade. So these explanation I will not be explaining in the next video. I'll just, for the start being, I'm doing that. So market starts with a big gap up, and you see it gives a this long wick, right? I don't remember what candle it is called. I think a hammer or something. So what does this signify? So whoever would have buy the mostly people to BTS trade, though there in this level earlier day, there are buyers and sellers, both are present in these levels, right? And also buyers would be present in these levels also, no doubt on that. Same goes for Nifty also. With this gap up, the sellers are gone. Whoever sold here, they might be booking their losses. So maybe that's why we are getting a green candle. But most importantly, we are getting a wick, and then wick basically tempts the buyers to come inside, right? To come into the trade. Now next, what happens? The market gives a breakout. The Nifty gives a breakout. Bank Nifty also gives a breakout, and basically it then gives a red candle. So here mostly we at this moment, now I cannot exactly tell what I was thinking, but here mostly usually when both of these give breakout, and whenever there is no stop loss upside, right? Because there is no way, I mean the only reason why would the market go up, we assume that the market will go up because of the stop losses are held there, okay? So here if you see, here if you see, the market gave a breakout, but here why didn't we took a trade? Here a easy put option could be taken, like as a simple psychology, but here what I did was, here if you see, there is a psychological level like 42,000 hanging up there, right? And after, and recently if you see, the market recently has changed a lot in this structure, right? Market structure has changed here. It has been sideways for so long, and it has been from yesterday it has started to gap up, right? So here if you see, the market actually gave a gap up, and we actually were not sure whether the market will immediately come down or not, right? Because usually why would, even if it is a week here, I'm telling you, as per my psychology, as per my whatever experience I have, people hesitate to buy in here. I mean, they don't easily buy here. With these candles, the sellers are easily getting attracted, because usually people buy because of there some levels or there something upside that they can use to set the target on, right? So here what happens, that the usually this is what I think, that with this red candle and with these green candles, the market would have clearly attracted a few buyers. It hit the stop loss, and again it starts going upside. Now we do not know how much long it can go, because in these types of market can keep going, keep trapping the sellers and keep going up. So we need to be sure. And another reason was this, as I told you, this 42 psychological level. So what we thought in this point of time was, again it was very much difficult to take the call option here, because there was a strategy like we can take a call option here, but the reasons was not strong enough. There was no multiple reasons there why. Okay, one reason for taking a call option, because the market had given the breakdown here, and Nifty is already like Nifty has space here, right? Nifty is not Nifty is like a little bullish, and it has already crossed 18,000 level a lot, and there is no stop loss above. There is high and most of the time here if you see that there are more bigger candles, green candles in Nifty than in Bank Nifty, right? So the market, okay, so the most of the people would be buying in Nifty here than in and when people buy, usually people when buy, if they see buying here, they also try to make a buying in here in Bank Nifty. So the market took their stop losses. That's what they yeah. So when the people buying with these green candles, the market took their stop losses because the Nifty was trending. And here when the market gave a breakdown, okay, so here when the market gave a breakdown, Nifty was at held to up some level. Now here you see that there was a wick, so and there was some buyer stop losses available there, so we cannot easily make trades here, right? Like the call option, because hardly what target can we expect, up to 42,000 only, right? If we make a call option here, but there is a very high risk here because the market could easily come to the closing price here, right? So we did not make any trade here also. Next we see that the market starts building up again, and Nifty also starts building up again. Here the market tries to give a very big candles. Now here what I started thinking was, so usually in these markets, what usually markets does is so basically I'll try to draw. So here you see, right, the market is going up and coming down, going up, coming down, going up, coming down, trapping, and coming down, like this. The market usually moves like this in the whenever it has to go up slowly or come down slowly, right? So as per these phases, what I thought was to make a channel pattern here. I was waiting for the market to create a channel pattern here, and that market clearly made also. So we made a trend line like this, and here we were somewhere waiting for what exactly would be the market trend line here at the bottom. maybe it could be like this or whatever, it could be like that. So I was basically waiting here. So yeah, what my plan was, so once these uh, my I think I made like this also, but this doesn't look, the shape doesn't look well, but yeah, something like this. My plan was basically that the market should cross the 42,000 level, and when it crosses the 42,000 level, that will call most of the buyers, and we can plan for put option there, right? So and another plan was like, usually when the market if it has to trap the buyers, so what it does is it will give this trend line breakout. Usually this gives, I'll give an example here that I took yesterday. I took 3 trades actually. Okay, the levels are not marked here because this is a new chart. Yeah, here. So one of my second trade yesterday was this. Somewhere like this I made a channel pattern. Yeah, and this was of course the one of the breakout level, I mean the resistance level, and or what, if I remember correctly, I think I made something like this. Yeah, to this level. So when the market gave the breakdown, I was just waiting for the candles here, and at this point when it made a red candle, first of all there is no stop loss upside, and as you see the market has given a channel breakout, usually and with these small green candles, the mostly the buyers would be prompted to buy, right? So I took a put option trading here. Now I cannot show you here actually, but still, and I took a put option here with 100 quantities, and I exited at this first candle, or I think in the beginning of the second itself, because I did not know like what would be the market be after this, so I exited early here, right? So my point is the market usually gives a breakout to times the buyers, and then again it gets back, right? If you see exactly this behavior, so this was what I was also expecting here. So I was expecting like this one will give a breakout, this one will give up to this will come up to this much level, right? So that's why I made a call option here around I think 9:37 only, right? Yeah, 9:37. Here I gave a 9:37, I made a call option here, I buyed here, and we see after that I recognize, if I just, it made a green candle, usually my stop loss is of around 30 points. So after that let's just see the chart also, you can see now. Yeah, 9:37. Yes, somewhere around here at 134, I think. 134 we bought, and around 105 or 104 was our stop loss level. Okay, so with this I bought, but later the market consolidated, didn't go up, and here the market actually went down here. If you see the chart here, you see this moment. After this moment, first of all this was also a little risky trade, so but still when the market came up here, this, it gave a range breakout of this small level, the whatever the sellers it has accumulated, it hit their stop loss levels. At this point, we were sure, like when it came to this point, I was sure, like mostly sure, like if the market now it comes down, there will be hardly any chance for our survival, basically, because what the candle shows at all, right? First of all, if you would like to see the patterns, it has basically retested this level that we could not predict when we were here, because we did not know what was the low here. After this I got to know the low. Basically it could have it could be a retest, that is the first thing. And also this head and shoulder pattern could work out because it is at the top level. Like this is the neckline and it can break, right? So here we knew like the market could go down from here. I mean, if it continues it's fine, but if it goes from here, we mostly would be hitting the stop loss. Here actually my stop loss was around 104 or something, but later on while this was happening, we were around this. I was thinking to make a trailing stop loss, but still since the market has already come down around here and it was expiry, options are volatile, so I still like made just one or two point stop trailing, and then I just immediately my stop loss got it. So that was all my trade today. Yeah, basically, and I didn't basically took any other trades. Okay traders, so I also wanted to discuss regarding my P&L levels. So here in January you can see like I had made around 27.67 profit. Usually my problem in earlier months was that usually a day comes in the month where I usually make a huge loss. Like here if you see the profits, it's around 4 or 5,000 or something around that, 13,000, 5,000, it varies around that. And the loss is usually I try to keep us around 6 to 7,000. it is actually around 3 to 4,000, but because of multiple trades it goes up, right? And because of that also I make sometimes a huge loss also. Like here you see like I made around 27,000 loss, around 28k you could say, but even after that somehow I made like 27,000 profit. If we see the February has been not good for me. Let's see, today is 16. Today won't be showing up here because it's not updated. We have been making a huge number of losses here. Okay. I'm just trying to curb my losses, because if you see like it is crossing like 8,000, 7,000, others are nice 3,000 something. So in nutshell, these are the just top stop loss hit and again reversal. These are those trades. I won't discuss that, but still I am working on this like 8,000, 8,000 and 7,000 trades. These are not good for my trading career. So from now on I will be mostly taking a single trade that would comprise of 3,000 loss. And even if my somehow if my loss doesn't hit 3,000, and maybe based on the market scenario I will think what could be, suppose if I make like 15,000 loss, then maybe I can make a second trade also. Okay, yeah guys, so this was all my first video. It could be a little longer, but from tomorrow onwards we will be discussing about the tomorrow onwards will be just a very quick explanation of all my trades. And just let me know in my comments, in the YouTube comments, if you need any change, any explanation more of the stuff that I explained today. Okay, thank you.